Good evening, Professor Valentine. Today I will be discussing the three major financial statements for nonprofit organizations, how they work, and basically their limitations and things of such. So without further ado, we will start with the statement of financial position, which is very similar to the balance sheet, and basically it explains that it explains all of your assets on top of all the debts that you owe. So like I said, it's very similar to the balance sheet. And the main difference between the two is that the statement of financial positions will also report all of the organization's net assets, which in turn indicate the value of an organization. The limitations of the statement of financial positions could be that the numbers are based off previous information, so it's not going to be the most accurate, nor can you predict future finances and things of such. And it'll rely on other financial statements too, which can also be a hindrance and a limitation. And in turn, some of these numbers that you'll get on your statement can be guesstimates, and they won't always cover every area. So yeah, so then we'll move on to the statement of activities, which will essentially replace the income statement and report all versions of the restricted values, and that is according to Willis. The statement of activities will show a positive or net change in each net asset fund, and so that's basically its function. The limitations for the statement of activities can include, since these net assets are not easily used by organizations that we just talked about, the unrestricted net assets are actually the value of the organization. So it's like it kind of makes it hard to understand where their number value is in terms of the total net worth of the company. So unfortunately, if a company had to close the doors, those funds that they had that they never were able to use because it is hard to use, they would be returned to the donors. And so it kind of gets a little tricky and a little confusing, but that's basically the process of it. And so lastly, you'll have the statement of cash flows. The statement of cash flows for nonprofits will highlight the cash in versus the cash out, very similar to just as for-profits, which is kind of cool because the statement of cash flows as well as the statement of financial position, the balance sheet, they're all very similar, which is kind of cool. But anyways, it works together with the statement of activities, and it uses the net assets and the changes on the balance sheet. So they all do work hand in hand, and that's kind of what the statement of cash flow does. So it's cash in, cash out, basically. The limitations of it, it will not present the net income. You cannot assess profitability because you don't have a net income to, not checks and balance, but like figure out. So it's kind of hard to assess how much money you're making, essentially. So it's kind of like an additive. It's not something that you should just depend on. And that's what the statement of cash flows is for nonprofits. And then for a real world example, you could just look at the church. So the statement of activities in a day-to-day business life of a church can show how much money they're taking in and how much it costs to run the operation. Those monies in can be donations, things of such. And then their operational costs can be electricity, things of such, rent, you name it. Then they use the statement of financial positions to see all the assets and liabilities that it had. So that can be the equipment, all of its assets, and the liabilities can be the salaries that they're paying the pastors and things of such. And then lastly, the statement of cash flows can see where the money is being spent and then how they can optimize their donations and maximize them as well, so they don't end up not being used. And yeah, those are the three major financial statements for nonprofits, and thank you.